Okay, so crude traded in a volatile but ultimately contained range as markets balance Middle East tensions against signs of restraint from both Iran and Israel. Oil initially surged on geopolitical headlines before pulling back as fears of a broader escalation eased. Brent crude remains below the key $100 level, suggesting that the market is still pricing in an insurance premium rather than a full-scale supply shock. As long as physical supply disruptions remain manageable, risk assets may continue to coexist with geopolitical uncertainty. For the US dollar, markets are now focused on this week's inflation data, with CPI and PPI expected to provide guidance ahead of the Fed's preferred inflation measures. Forecasts point to May's CPI rising 0.4% month on month and 4.1% year on year, while core CPI is expected at 0.3% month on month and 2.9% year on year. Although service sector inflation remains elevated, easing rent pressures and the Fed's restrictive stance continue to support expectations for potential rate cuts later this year and into early next year. In precious metals, gold ETF flows remains subdued in May as investors largely adopted a wait-and-see approach. Global gold ETF holdings fell by 16.2 tons, while assets under management declined by 2% to $604 billion. A stronger US dollar, elevated interest rates, and improving risk appetite have limited demand for gold, although safe haven buying in Europe remains supported by political and fiscal uncertainty. That's all for today's evening market outlook. As always, manage your risk and happy trading.